In this particular video, we're going to be talking about key levels, its types, and what majorly is all about. Specifically, the beginner's level of key level that we've not really talked about. Slowly, we're really getting to the in-depth of what this strategy, structural liquidity, and key level is all about. We've talked about structure in the previous videos. We've talked about liquidity, and now it's time to talk about key levels, the A shapes, the V shapes, and everything. All right. So if you've not liked or subscribed, I urge you to do so for more.
So you're welcome to another class, and today we're going to be talking about key levels. We've slowly we've slowly taken our time to explain the basics of everything of what structure, liquidity, and key level is all about. So structure liquidity videos are already previously made. They are there. Alright. If you've not gotten them, I suggest that you go through them. And this is key level. Alright, we're going to talk about key levels. We're going to talk about the basics of it, what exactly they are, and why they are. Alright, so what are key levels? First of all, what are key levels? Key levels, they are specific points in the market, or they are specific points in price chart where the big banks, where the institution, the smart monies have left their clear footprints. Right, let me explain what that is in a very softer way, or in the way I understand it. Right, so key levels in the market to me, they are like zones, or they are areas where after price sweeping liquidity, we expect them to react from. So if we have a key level place, all we are doing is literally just waiting for price to react from that key level. That is just basically what it is. Every other person have their ways of identifying key levels and what it is, but me personally, a key level simply is just a zone that we all wait for price to come and react from. The whole big English about smart money, big banks, and all that is really not necessary. All I just look at price as is I expect price to wait for my zone or get to my zone and react from. So fundamentally here we have three major types of key levels, three types of key levels. Right, we have our A-shaped key levels, which is for resistance. We have our V-shaped key levels, which is for support, and we have our open close key levels, which are OC levels. We can call them OC levels. Right, so the A-shaped key levels, I'm going to break them down. Right, so A-shaped key levels, they are mostly identified when we have a bearish candle and a bullish candle together. A-shaped key levels, are identified when we have a bullish candle and a bearish candle. They are majorly used for sales. Alright, now the V-shaped key levels, on the other hand, right, are identified when we have a bearish candle and a bullish candle together, and they are used for buys. Now open close key levels, right, we can identify these as the, should I call them, the separation or the line in between two candles of the same types. Like if we have a bearish candle, then the next candle is also bearish, the line in between showing the opening and the closure of these candles. So this is a bearish open close key level, right? So these two candles are bearish candles, and this particular candle, the middle here is the closing of that candle, it's the closing of it, and here too is the opening of this candle, right? So as a result, you draw your line in between, and then you have your bearish open close key level. Same thing applies to the bullish. This is a bullish candle, this is also a bullish candle. You draw your line in between to identify your bullish open close key level. Right, as you can see in this particular drawing, this is a bearish candle and a bullish candle together to indicate a V-shaped key level. So what we want to do, right, according to our typical support and resistance that we all know, we expect price to dump to this zone and buy. If you know what support and resistance is, I'm pretty sure that should be easy, but when you get to the market, it's a totally different ball game. Right, so same thing applies here. Expect price to dump. Alright, it is that simple to explain. Alright, so once price gets to these set zones with the requirements from our buyers or market structure, if you don't know what market structure is or what it's all about, I urge you go back to the previous videos and understand what it is. Alright, so price would give you the rejection that you need to this zone. So this particular zone is the V-shaped key level, and what we want to trade is the reaction that comes from this level. The same thing that applies here. All right, so we can't actually just get into the chart just because we've seen open close key levels, we've seen A-shaped key levels, we've seen bearish this and bearish that, we've seen the bearish and the bullish together giving us the V-shaped key level, we've seen the bullish and the bearish together giving us the A-shaped key level for sells and for buys. No, there are structures in which these support and resistance key levels will be placed. Right, then we identify them from there. So with that being said, we want to get into the types of support and resistance. We want to get to the types of support and resistance. Now to the types of support and resistance, or should I say to the types or structures of this particular support and resistance key level. We have the typical support and resistance, which we all know, as I explained before, is the A shape for sales and the V shape for buys. We all know this particular, we expect price to reject whatever and sell or buy from. Then we also have the breakout support and resistance. This is where it gets tricky. So in this place here, this A shape that we all know that is supposed to be for sales gets broken. Right, it got broken, and then we expect price, or we saw price react from it. Now this zone being broken, this zone being broken becomes disrespected. As you can see, it got broken with a body, fully broken with a body impulsively. Right, so this zone becomes disrespected, and disrespected key levels always have a tendency of being used again. All disrespected key levels could always be used again, right? No matter how many times it gets disrespected, the more it gets disrespected, the more the possibility of it being used again. So here is where we expect price, we saw price react from next. As you can see, same thing applies from here, same thing applies here. Now in a situation where this zone, in a situation where it's like this, where we have the A shape gets impulsively broken and we saw price come to react, we can clearly see that this zone, which is the A, was meant for what? Was the resistance as a typical S&R. So it gets broken, and that zone became a what? A support. So this is called RBS, support, sorry, RBS, resistance break turns into support. Same thing applies for the SBR, right? Price was what? A resistance zone before. Sorry, price was a support zone before. We expect price to, give us a rejection and buy, right? But then price broke it impulsively and came back and tested that zone again. And then what do we have? We have it turning into a resistance zone. Resistance for sales, any resistance zone for sale, no matter how it appears, resistance zone for sale and support zone for buy. So no matter how it appears, whether it's the A shape or the V shape key level, you just need to know the structure in which it presents itself. So this is the breakout support and resistance. Now to the head and shoulders support and resistance, then the failed QM. These two are a little bit identical because they are both head and shoulders patterns, but the difference is this head and shoulder pattern got formed completely. In other words, it got formed completely, and then we bought off the left shoulder. Alright, we bought off the elbow, should I call it the elbow of the left shoulder? I like the elbow of the arm on that left shoulder, right? So on this other side here, we bought it from the literal left shoulder because it's a failed head and shoulders. Let's call it that. In other words, we call it the failed QML, right? So once we expect price to come and tap, this is where the break of structure happened. The break of structure happened here, and then if you keep watching directional bias, you would see where the explanation of break of structure comes in. And before you say anything, if you check in my previous market structure videos, it is well explained in there what break of structure shows or what it shows. All right, so price reverses. There is break of structure that has happened here. We take price off, we take our entry off the left shoulder. Alright, we take our entry off the left shoulder and price would buy from there. Alright, so this is a failed head and shoulders. This is a completely formed head and shoulders. Now in this case, we take price from the elbow, and in this place we take price from the left shoulder, the literal left shoulder itself. Alright, so we don't really care about the rest, the head itself, just the left shoulder. So they are both practically the same thing, just that one is completely formed and the other is failed. All right, the other is failed. So the only thing we need out of all of them, we don't even call this elbow, we call this left shoulder regardless. We just want a situation where price buys from either here or here, provided that is where liquidity presents itself. It is that simple to explain, but when you get to the chart, it's going to be difficult. It's going to be a little bit, tense. So for the most part on this, right, we are going to be dealing with the line chart, because like the line chart shows you what the candle chart is. It gives it to you precisely, so you don't end up making mistakes. All right, maybe as time goes on, you get used to it. All right, do not forget, I said the disrespected key level is a key level that got broken impulsively with a body. It gets broken with a body, and then we see market use that key level again. Now a disrespected key level is one that's got broke, that's getting breaking broken with the body rather. Now a respected key level would mostly be shown in terms like this, where we have this particular zone. A respected key level is where we have maybe a week at that key level, maybe close to that key level, or maybe even taking out the key level itself. Then this zone, no, when it's taking out the key level with the week, this zone will not be used again. It will literally not be used again unless price wants to take this out as liquidity. So if this is not liquidity in any way, this zone is completely invalid, it's pointless. All right, so the next place you want to look out for is where we have things like this, where price breaks out impulsively. Alright, where we see price break out that particular level impulsively. So a disrespected key level has a likely, in fact, the more disrespected key level, the better that zone is going to be used again for either buys or sells. But a respected key level would not be used again. So when it's a respected key level that the week is like this, is liquidity, we expect price will sweep the liquidity and tap this key level. Alright, but when you see it respected completely, as in price closes like this and it's a wick, not a body, right, below or above a key level, can be here, can also be here. Let me put it for the sales too. Then this zone cannot be used again. It's completely pointless at this point. So we have a rejection unless price wants to take it out and take this zone, this wick out here as liquidity. Alright, unless price wants to take it out as liquidity. Anyways, with that being said, let's get into chart example of each and every one of this structure. In my next video, I am going to explain to you how we use them, how to identify them, what they are used for, and how we use them while trading the SLK strategy. All right, so the first one, let's look at it from the V shape. Just like we've said previously, the V shape is meant to sponsor buys, and as we can see in this case, price did what? Price bought. Price bought. Do you see that this particular key level being respected, right, by this week? Price never came back to it again. Price has not come back to it since then. Alright, but levels that have been broken impulsively, see this level got broken, has been broken, and we still came back to it, and we saw that price came back and has used these same key levels. It has used this, and you can see it has used this. If you use the line chart, you'll see it very well. This key level got broken, and you see that it was used for a few hours by, as you can see. This is a 4-hour chart, so all of this was just 4 hours, 4 hours, 4 hours, for like a couple days by, or should I call it a day by? Yeah, you see this. So here, this particular key level was disrespected, this one was respected. So this one being disrespected 2 times, by the way, it got disrespected 2 times, got used again. Now this particular key level that got respected, which was the, and just like I said previously, this key level got respected. Okay, it didn't really get respected because price didn't really get to it. All right, was used as what? Liquidity, and this liquidity got what? Taken out for this key level that got respected, and as it got respected, price has been buying ever since. Now let's talk of, this is the V shape. All right, now let's go to the A shape. All right, you can see here price used this particular A shape key level and sold off this one. Do you see this? This zone sold off, and price did what exactly after this zone happened? Price used this zone as liquidity to even sell off from a bigger zone as liquidity, and then sold off from here. As you can see, the price have not really gone there ever since. Changed the character entirely, and price have sold off from here all the way down. For even, you might even see other explanations or other views of the open of the A shape. You might see other explanations here. Alright, but price didn't really respect this zone for you to sell here. This is also another A-shaped key level. If you use your line chart, you can see it. This key level here is an A-shaped key level. As you can see, this zone sponsored a huge amount of sales. Alright, so now let's look for a situation where price actually bought off the open close key level. See the open close key level right here. Right, this is an open close key level that got respected, and open close key level that got respected right here, and then we have our boost from here. Alright, so we have our boost from here. The price actually respected this open close, this bullish open close key level right here. You can see this price closed here and here opened, and this zone was respected, and we bought momentarily, like for the meantime. And then let's see another zone where, okay, this is a bearish open close key level that got respected for the sales. Look at here too, this is another bearish open close key level that got respected right here. See this is an open close key level. This is the open close key level, price respected and be dumped for the meantime. Alright, so that's the open close key level, that's the A-shaped key level, that's the V-shaped key level. Now let's go over to the structures. Now we have showed you the typical S&R that we all know. Now let's go over to the other parts of the structure, the breakout S&R, the QML S&R, the field QML S&R, and the head and shoulders S&R. Alright, we can even still have it right here. This is the SBR. Alright, as you can see, this is the V-shaped key level that was what meant to sponsor your buys. But as you can see, price broke it impulsively, and as price broke it impulsively, price retraced and sold off, give us a little sell. As you can see, this is the SBR, right? Just like I showed you in the graph right here, price broke it. Alright, we have this little liquidity zone right here, and price sold off. Right, then the same thing applies here, but I think here's a missed entry anyway. Okay, it's not mixed. Look at this one right here. You see price doing something like this. You saw price did what price had. What this is the A-shaped key level that's meant to sponsor your sales. Price broke it impulsively, gave us a little bit of liquidity, price took out the liquidity, and boom, we've been buying ever since. So that's the RBS and SBR. So this is the RBS. This is the RBS. Resistance gets broken and turns into support, and then this is the SBR. Support broken turns into resistance for the sales. All right, now let's look for the field QM and the head and shoulders pattern. Now look at this. I actually caught a trade on this. Recently. Alright, this was like, when I catch this trade, this was on the daily time frame, by the way. I caught the trade on Tuesday. That's like last week, or when? Yeah, I think on Tuesday. Alright, anyways, this is what happened. So this is how this is the field QM. This is the field QM. This is not the regular. This is the field QM. This is not the head and shoulder. So the field QM, as you can see, let me use the path to explain this. Alright, we've seen that we've had our market structure all the way down, and this is what happened. Price broke it, right? As we've seen in the previous, we've seen it before. Now, what did price do? Now we've seen the structure. What is this? Alright, so we've seen the structure, and you see that price did what rejected off this particular zone here. Now this zone, I've said it previously, this zone is where this is the V shape and the A shape key level that price did what price bought off this particular zone. This is the H. Look at, we use the line chart for this. Maybe I have to like clear the whole chart. Very good. So this is your field QM. If you have the diagram, you could check it again. I'm pretty sure some of you took screenshots. Alright, so this is it. This is your field QM. So this is the left shoulder I was talking about. This is the break of structure that has happened. See that price reacted from the left shoulder, and price has been buying since. And you see that if you've watched my market structure video, this is your next target, which is your swing high right here. So which means you have to keep looking for buys on the daily time frame or on the 4-hour or whatever time frame you do it onto that zone. So as you can see, this is the field QM that got taken out. As you can see, price broke it impulsively, right? once, twice, and as you can see, it broke it crazily impulsively, like, and price did what? Reacted from it again. That's basically just it. This is the field QM. Alright, now let me show you the head and shoulders. Alright, so I caught a trade from this couple. This has been a while though. Yeah, I think it's there about last 2 weeks or so. So this is the literal uh head and shoulders pattern. So as you can see, price broke this level impulsively, and you see where liquidity came out to lie down right here. Right, liquidity came out to lie down, and if you've watched my liquidity video, or let me even say it now, maybe I've not said it previously, you have to take your entry from the liquidity, like from the key level after liquidity. So if this is your liquidity, this is your liquidity, obviously this is your B. This are, like I said before, this is your B, your structural liquidity, your inducement, whatever anybody may call it. This is your B right here. The next key level is this V-shaped key level right here that sponsors what? Buys. Like I told you before, broken, disrespected, and price did what? Price respected it, and we've been buying since. Mind you, this is the head and shoulders pattern I'm referring to. Do you see this? Oh, sorry. This is the head and shoulders pattern I'm referring to. You see this? Left shoulder, the head, and price did what? Price bought off it. Mind you, I don't want you to forget the fact that there was a break right here. It was a little mini break here. Exactly, there was a little mini break right here. If you check the line chart, you get to see that price broke this zone here. So everything was already in accord. And price rejected off this. And we've been on the buy streak. And if you even check it again, you get to see one of these structures I'm referring to on GPJPY. It's just that price have been really slow lately, and I guess because of December. So this whole liquidity, I've regarded all of this zone as liquidity, and this gap about to be filled. And if you watch my market structure video, right, you see that price broke here, right, making this place our C, making this place our what? This our B liquidity, and here our A. So what do we want? We want to see price doing what? Price taking out all of this liquidity right here. I'm sorry about my chart though, and buying. It's that simple. We just want to see price take out all this liquidity, fall down to the zone, and buy. It's that simple. Filling up this gap, taking out liquidity. Practically that simple. Anyways, that's all I have for you on key levels. Do not forget that there are disrespected key levels and respected key levels. Do not forget the major types of key levels: the A shape, the V shape, and the open close key levels. Do not also forget the types or the structures in which these key levels can present itself: the breakout, support and resistance, the field QML, the typical S and R that we all know, typical support and resistance that we all know, and the head and shoulders support and resistance. All right, that will be all. See you in the next video.